So what you're about to learn is extremely powerful. This is ICT's entry method which he uses in his 2022 mentorship, and I'm going to show you how it works, why it works, how you can use it. Let's go. For the entry model, it's nothing really that complicated. There's loads of external factors like daily bias, order blocks, all those things, but we'll cover that later on in my upcoming videos. But for this video specifically, it's just the entry model, and it's pretty simple, so I'm just going to break it down for you guys, and let's get into it. So all we're looking for is buy side liquidity or sell side liquidity, some sort of liquidity basically. Okay guys, take notes. Some sort of liquidity needs to be taken for an entry model to even be considered valid. So since I trade London, these liquidity runs usually happen in the London session, the London kill zone. So check out this video right here or wherever for a full explanation of that. And I've got a New York kill zone video coming up as well, so stay tuned for that. Basically, it's just reinforcing that whole idea of time and price, which ICT keeps going on about. During our specific time, London kills or New York kills and whatever, we're looking for buy side or sell side liquidity to be taken. Then it moves on to this diagram. So once this is taken, once price goes and breaks like equal highs or something like that, check out my liquidity video as well. It's really good, don't miss that one. And we'll be hunting our entry. So as you guys know, power of three, check out this video. Whatever side the liquidity is run first, the other side is what you'll be trading with. So buy side liquidity is taken out first. So it takes out all the early sellers and all the breakout artists, as ICT says. And then we'll be looking to sell. So it goes up first and then we're looking to sell. So it goes down. So that's what we're looking for. So then we can get onto the entry. So after the liquidity has been taken out, then all we're going to be looking for is a break in market structure. It should be pretty obvious. Some of them are really clear. I've had like about 10-20 trade examples already where it's really clear and it's really simple. So, and we'll go through them as well, so don't worry. But we want to see a break in market structure, and then we'll be entering. As you guys know, fair value gap, stop loss will be above the first candle, and our entry is on the high of the third candle. Check out the fair value gap video I did. It's really useful because that is what we're going to be entering off of. It's nothing really that hard. The simpler it is, the better it is in trading. So now we're going to go through some examples, and I'm going to show you real life examples using the bar replay tool. If this video is helping you out so far, then don't smash the like button. Joking, smash it. Thanks a lot, guys. So guys, this is the example I want to walk you through, and this whole box is the Asian range, and that's really vital for me in my trading because I'm trading the London kill zone. So the Asian range, the Asian high and the Asian low are very important for the power of three to even start. So let's say my bias was bearish on this day. That means what I'm looking for is I'm looking for this high to get run. So we can write sell side liquidity on that. Sorry, buy side liquidity. Yeah, buy side liquidity. So we want this to get hit first, and then we'll be looking for our trade short, right? So we want to see, it was that same diagram that I showed you before, whereas this, the liquidity gets taken, and then we'll be looking for our entry model down. So that becomes the London kill zone. So now when it enters this, I can start looking for a trade because the buy side liquidity or the Asian high has already been taken out. So I'm like, all guns blazing. I'm ready for taking shorts now. Now all we're going to be looking for is that break in market structure. So we've had this already, right? We've had this. Now all we're looking for is this move right here. That's what we're looking for, and we can enter a short. So let's see what happens. Now here, this is a break in market structure, right? But is there a fair value gap? So that's why you guys need to watch the fair value gap video, because then you won't understand what the fair value gap is. So now this, we had a swing low right here, and then we've had a break in market structure. So I'll just draw this white line there. BMS. Break in market structure. As you can see, came down, went up, and then came down. So pretty much it's just this. Went down, came up, and broke this. This is this, right? So we've had that. Now, is there a fair value gap here? Yes, there is. And I'll just draw it right here. You guys should be able to see anyway. But I'll just draw it there. That's our fair value gap. So our entry is going to be off that high, and then our stop loss can be above this swing high. And that's a 5 pip stop. I usually try to keep it 7 pips or higher, so we'll just go 8 pips for spread, and just to give my stop a bit more breathing room. And then we can target all this sell side liquidity there, and eventually targeting the Asian low, which is the main target in my trading at least. We'll get tagged in on this candle, and then it just plummets down. Now I actually want to go through some of my own examples that I've noted down in my Notion, so let's get through that now. Here's another example. So as you can see, sell side liquidity has been taken out, and this is on a lower time frame. It's a 5 minute. So sell side liquidity is taken out right there, and this yellow box is the London kill zone. So this is when I'm looking to trade. And then we have a break in market structure right there. Now in this leg, where is the fair value gap? Right there, this blue box which I've drawn, that's the fair value gap. Our entries on this low and stop loss, I made it, I think I've written it somewhere. 8 stop, yeah, it could have been lower, but I just want to give my stop more breathing room. Here's another example. Buy side liquidity, as you can see, equal highs, perfect. What does the market do? It goes up, runs them out. During the London kill zone, what happens? We get our break in market structure right there. Can I zoom in more? Yeah, a low, a high, a low. And this is the fair value gap. And look how many times we had, to enter the market. 1, 2, 3, 4. That's the benefit of having a larger stop and more breathing room. Instances where it comes really close. If my stop loss was right there, really tight, probably would have been taken out. And guys, this is the final example which I'll be showing you. So same thing really, sell side liquidity, taken out, London session, London kill zone. We had a break in market structure here, but we ended up taking out the Asian high, so then I removed my order. But then what happened? We came back in, took out this sell side liquidity, then I was interested again because we were in a discount and below the opening price. Then we had a break in market structure, and as you can see there, fair value gap, what does it do in like 10 minutes? Next 10 minutes tags us in, has a bit of a consolidation to be fair, but eventually goes up, and I think it's a 1 to 2, and I was like, let me just take my full position out here, and that was a trade. I hope you learned something new. If you have any questions, comment them down below. That's all from my side. See you guys next week. Happy trading.